If you are familiar with Form W-8BEN, it is important to understand that Form W-8BEN-E is not the same form. Form W-8BEN is used by foreign individuals, while Form W-8BEN-E is used by foreign entities, such as corporations, partnerships, limited companies, and certain organizations. Form W-8BEN-E is used to certify that a business is not a U.S. person and to establish how U.S. tax withholding rules apply to that entity. When a foreign business receives certain types of U.S. source income, U.S. law generally requires a 30% withholding tax unless proper documentation is provided. This is the default rate. Common types of income that may trigger withholding include dividends, interest, royalties, rents, licensing fees, and certain passive or fixed U.S. source payments. Without a valid Form W-8BEN-E on file, the U.S. payer must withhold at 30%, even if the entity ultimately qualifies for a lower rate. The form serves three primary purposes. First, it confirms that the payee is a foreign entity rather than a U.S. person, preventing backup withholding that applies to U.S. taxpayers. Second, it allows the entity to claim a reduced rate of withholding under an income tax treaty between its country of tax residence and the United States if one applies. Many U.S. tax treaties reduce withholding to 15%, 10%, 5%, or sometimes 0%, depending on the type of income and eligibility requirements. Third, Form W-8BEN-E establishes the entity's classification under FATCA, the Foreign Account Tax Compliance Act. The entity must identify its tax status, such as corporation, partnership, disregarded entity, active NFFE, passive NFFE, or foreign financial institution. This classification determines whether additional reporting or withholding obligations apply. To complete the form properly, a foreign entity typically must provide its legal name and country of incorporation, its permanent address, a foreign tax identification number, a U.S. EIN if required, its FATCA classification, and treaty benefit information if claiming reduced withholding. Form W-8BEN-E does not eliminate tax. It allows the withholding agent to apply the correct rate based on the entity's status and eligibility. The form is given to the U.S. withholding agent, not sent directly to the IRS. Once signed, it generally remains valid until the last day of the third calendar year following the year of signature, unless the entity's circumstances change. If the business changes ownership, structure, tax classification, or country of residence, a new form must be submitted. Failing to provide a valid and updated form can result in full 30% withholding and possible payment delays. In short, Form W-8BEN-E ensures that foreign entities receiving U.S. source income are withheld at the correct rate, no more and no less, while maintaining compliance with U.S. tax regulations. For a secure and efficient way to manage Form W-8BEN-E and other IRS compliance requirements, visit TaxBandits.com and simplify your reporting process today.